The big four banks in Australia have a privileged position, and that position in this country helps them return substantial profits. However, as you may have heard or read in the news recently, interestingly, the CommBank has revealed they won't be closing regional branches for at least 3 years, despite announcing how important it was to do so. Now, why did this happen? Westpac Bank, another one of the so-called big four Australian banks, has revealed that it's backflipping on a decision to close its Cloncurry branch here in Queensland, as well as another 7 in Australia. They've been on pause. And it's probably not a coincidence that these announcements have been made while a Senate committee has been looking at this very thing. The Senate Regional Banking Inquiry has been running for a while now. Westpac was apparently going to close at least 8 branches, apparently not anymore. So let's go to a Queensland LNP senator who's on that committee. Senator Gerard Rennick is an LNP senator for Queensland. Senator Rennick, thanks for coming in. What does this reveal, Senator Rennick? These major banks have said, no, okay, we're going to pause our important closures.
Well, I think what it shows, Steve, is the fact that this banking inquiry has put pressure on the banks to keep their branches open. I've been very vocal in calling for a public bank like we used to have, which is what CBA used to be, Commonwealth Bank used to be. It was owned by the government, and I think the threat of the chance of a Labor government starting a public bank along with the state government or a government insurance office has made them reconsider their decision to close branches. I think that they've looked very callous. I think, from a marketing perspective, they've put profits before the people, and I think people are sick and tired of being treated like second-class citizens. I mean, the banks make a lot of money in the regions. They should return some of those profits to the regions.
I want to read between the lines here. So as an LNP senator, you feel that there is the possibility that a Labor government would establish some sort of national insurance office and would have some sort of inclination towards a Commonwealth-controlled bank as well, like CommBank used to be?
I don't know that this particular Labor government would, given that Anna Bligh, who's a former, high-profile Labor politician
from Queensland,
from Queensland, is the head of the Australian Banking Association. But I know they certainly wouldn't want a discussion about a public bank or a government-owned insurance office, because that would suddenly make people aware that such a possibility could occur.
Senator Gerard Rennick is my guest. The CommBank has said no more regional bank closures for 3 years. Does that show that they're simply waiting till the current crop of senators face an election, or does it show something else?
No, the cynic in me thinks they're kicking the can down the road until...
They want to wait till you're not there, basically.
Well, some may say that, yeah.
All right. Do you say that?
Well, look, I mean, I think they're kicking the can down the road.
Okay.
I think if they could have got away with it this time, they would have. They haven't. They've been called out for the fact that, as I said before, they put profits before the people. And it's only a matter of time before they try it on again.
Let's go to Westpac. They say they have a digital-first policy, which, by the way, the ABC also now has, a digital-first policy, and blamed customers for driving the move to online banking. And this is a line you're hearing from other major banks as well. And they've been sort of citing figures to show that. How do you regard that argument by the big banks that it's digital-first and customers are bringing it about?
Look, to an extent, that's correct. I mean, I use net banking. I just used net banking then while I was waiting to talk to you. But the fact of the matter is, when it comes to services, so there's 2 types of activities the bank undertakes. One is just the straight-up transactions, and a lot of that can be done online. But then there's other services that people want done, whether it's estate management, a new credit card, a new loan, that I think is, and many people consider, can be done better face-to-face.
National Australia Bank, another one of the big four, they've been blaming a drop in foot traffic for branch closures. But now a bit of media work by the Independent Australia News website has shown that the figures they were using were actually quite misleading, because they only cover over-the-counter transactions, not people sort of coming into the bank, as it were. Can you speak to that at all?
Yes, well, look, according to that article, and, I'll qualify it by saying according to that article, that the NAB has been engaged in misleading reporting by not counting the activity that takes place under the service stream of activity rather than a transactional form of activity. And if that's the case, then I believe that's verging on deceptive, if not deceptive, and that APRA, the Australian Prudential Regulation Authority, should do more to make sure that the banks actually report what's going on in terms of activity.
This is ABC Radio Brisbane. I'm speaking with LNP Senator Gerard Rennick. We're talking about banks in Australia as they close branches in suburban areas. They're also doing the same thing in regional areas, and for obvious reasons it has probably a bigger impact in regional Queensland than the city for some reasons. Senator Rennick, when you were in Victoria examining this, Westpac told you we're using the data that we have about branch usage as our primary position for making a decision around the branch. But I think the committee found out that they didn't actually speak to anyone outside of their own branch. In other words, they're basing these decisions entirely on data, from their database, not the community, not the mayors, not councils, not customers, entirely from data. Is that why? You're a businessman, I know. Is that wise?
No, I don't think it's wise. I think it's actually very callous and poor business in general. And it's just interesting to note too, you would think that you would want your bank managers out in the regions, because if you know the people who live in a town, for example, you're in a much better position to actually judge how creditworthy the customer may be, rather than trying to make that decision from head office in a capital city. And it's also worth noting that a lot of that data is actually flawed, because when it comes to business banking, the business banking isn't actually attached to the region. It's attached to the stream of banking. For example, so you may have retail banking, business banking, institutional banking, credit card and personal lending. So that's deceptive as well. So the fact that they're only relying on data, number one, and number two, they're not actually engaging with the community, I think is very poor form.
What sort of a social licence do the big four banks have in Australia, stemming, from their sort of semi-protected position? How do you see that, their social licence?
Well, they have a complete social licence, and they're not semi-protected, Steve. They are fully protected. They were bailed out in the GFC. They were bailed out in the COVID crisis. They were lent $188 billion at 0.1 to 1 or 0.15%. That money now can be parked with the RBA at 4.1%, so they're clearing a 4% margin, which on an equivalent basis is worth about $7 billion a year. So they are completely underwritten by the taxpayer. So the idea that these guys are operating under a capitalist form of the economy is completely false.
What would you describe it? If it's not capitalism, what is it? Crony capitalism or something else?
Well, it's not crony capitalism. It's that they're protected by the government, and rightly so, because they are literally too big to fail. But because of that, they do have a social licence to provide services to all people, as well as the regions, particularly the regions.
How much money did the Australian taxpayer give the big four banks during the pandemic lockdown period?
Well, effectively, what they've got is a very cheap rate of interest, which is saving them about $7 billion a year on current interest rates, and that will run through till the end of, some of it rolls off this year, but most of it rolls off in 2024.
Courtesy of the Australian taxpayer?
Yeah, courtesy of the Australian taxpayer. So all up, by the time this term funding facility is completed, they would have had about a $15 billion to $20 billion handout.
Does that change your opinion? I mean, they've all been reporting very healthy half-yearly profits, 4 or 5 weeks back. How does that make their figure look different from your point of view?
Yes, it does. But that will also be passed on to the customers as well. But they've had a very easy run for the last few years, obviously because of that loan as well as the cheap finance. Now they may run into a bit of trouble later on when the term funding facility rolls off and these cheaper fixed rate loans roll off, and people who are, say, on a fixed rate loan at 2.7% may have to go on to a 4.5%. They may encounter some bad debt provisions depending on the employment rate and things like that.
Well, our banking system here is strong. We want it to be strong.
Absolutely.
We want it to be healthy. There's no doubt about that.
Yep.
But do they have, given the apparent mortgage cliff that many people who borrowed at very historically emergency rates and are now had them lifted by the RBA at record rate lifts, do the banks owe their depositors or their mortgage holders anything other than what's in the contract? Sorry, I know this is slightly tangential.
Yeah, no. Well, there's that. That's another issue, is how quickly they do raise their interest rates on deposits as well, which is a whole nother conversation. And I know from having worked in a bank that they do delay it deliberately just to skim a few months' profit off the cheaper funding that they can get from their depositors. But I'd argue that they should pass it on as well.
Okay, where is your Senate committee at the moment?
Well, the Senate committee runs throughout the duration of the year. The next hearings we have are in Western Australia in mid-August, and then we'll be going down to Tasmania as well as New South Wales before we submit a report at the end of the year.
One of the other issues that's come up in banking here in Australia is the issue of actually getting access to cash. Now, we know that electronically now, every time you do an electronic transaction, this is a fantastic income stream for the banks. Every time you tap, but particularly tap and go, customers were pushed onto it. Now that we're onto it, cash is sort of diminishing in its use, but the level of fees and charges is increasing. How do you feel about that? I ask you as someone who's an experienced accountant. You've got a lot of business experience.
Yep.
How do you feel about that process? I think you might call it nudge economics.
It is nudge economics, but it's also convenient. So it is very hard to, fight against the tide of people do prefer to use cards. I mean, I've been using, I rarely use cash. I might go to an ATM now once every 2 months, whereas once upon a time I was there every Friday afternoon at 5 o'clock before I went to the pub. So it's a fact of life. But having said that, I still think that cash is still an important part of the economy. There are times, for example, on weekends at fates or community, when community organisations have events where cash is used, even though they are moving over to the cube. But look, I think cash is still a form of legal tender, and I think that service should still be provided to those people who want to use it. I want to take a call in a minute, so I'll get you to put your headphones on so you can hear what my listener has to say. But do you think, banks making it harder to get cash? They're actively making it more difficult to access it. In many metropolitan branches here in Brisbane now, you can't actually get it over the counter unless you have an appointment. They sort of refer you to the ATM machine at the front, which does also have a cost, a charge, when you use the ATM machine. How do you feel about the appropriateness of that or otherwise, Senator Renege? Well, look, obviously that's being driven by the profit motive again, because the fewer people have to employ to dish out cash at the teller, the more money they make.
And they make money off the electronic transaction through the machine, don't they?
Well, that'll depend. Banks don't generally charge if they use their own ATM. So from a customer Commonwealth, except
if you have it, like if my bank, I think my bank says if you use it more than 7 times in a month or something, you get hit with a charge.
Yeah, sure. Okay.
Yeah. At some point, you're getting clipped.
No, that's true. That's correct. Well, look, yet again, that's the profit motive. That's how they operate. And it's pretty much indicative that there's a general decline in service when it comes to banking services and many other services for that matter.
Melody, tell me your story when you were paying cash at a local business in your suburb. What happened, Melanie?
Oh, well, I went into the newsagents to purchase the Saturday paper, and it was $4.70 So I handed over my cash, and the newsagent said to me, she said, you use cash. And I said, yes, I do. I said, for my coffees, and I really enjoy giving my cash and not having to pay that little bit extra. And she said she's the same, but she has a problem because the local, can I name the bank?
Yeah, of course, go for your life.
Okay. The local NAB bank at Cleveland is being advertised as closure as of September. So with the cash coming over the counter, and her ability to have change, to give change to her customers, is rather fraught because she has to travel all the way to Capalaba to service the bank there.
So the National Australia Bank in Cleveland has said that they're closing in September this year.
Yes.
And that this is going to affect the businesses in the area by the sounds of it.
Well, if she's indicative of a lot of businesses, that's true, because I pay cash for my coffees, Steve. But today I didn't, and I got hit with that surcharge, and it was on my little docket.
So not only have you got the inflation of the cost of coffee going up, but you've also got the inflation of the bank charge for using your tap and go as well.
It was. I took my daughter out for a coffee and some light refreshments, and it was an extra 68 cents because I used my card.
There you go. You're a good mother nonetheless. Melody, thanks for telling the story.
Thank you, bye.
That's not alone. Brad says, I live in Brighton Sandgate, and Westpac closed many years ago. Now they have removed their ATM. We have to travel 25 minutes to get to an ATM or a bank. This is ABC Radio Brisbane. Senator Gerard Renege from the LNP is my guest. So these are these little small examples, Senator Renege, of where banks, for reasons of profitability, I don't know. How would you describe what's going on here? How would you describe it? I mean, in theory, it's no big deal because it's all digital first. But there's all these little examples of where it's actually costing their customers.
That's right, Steve. And like I said, I believe that banking, as we've already discussed, do have a social licence. Banking services like schools and hospitals, I think, are an essential service. And given the enormous amount of support they're given by the Australian government, both in eliminating their downside risk by getting bailed out whenever there's a financial crisis, and the enormous amount of money that they get when there is a financial crisis, they do have an obligation to provide these services. And it's just basically callous profit gouging as far as I'm concerned. And it's particularly bad in the regions. I mean, we've been out at Cloncurry as a part of this banking inquiry, and if the bank's closed there, they've got to then drive over 100 kilometres to Mount Isa. And if you're
surely that I mean, I know they said they're not going to close it now, but you can see they're just waiting for an opportunity when your committee goes away.
That's exactly right. And if you are a business, businesses do not want to keep cash on their premises overnight, so they will then have to drive to Mount Isa and back, at least once a day to do their banking, which will be a 2-hour round trip. So what will end up happening is businesses just won't bother opening in that particular town because, banks are the lifeblood of businesses in small towns and large towns.
A few of the finance writers are writing about this. I noticed in some of the big newspapers, one of them saying the ANZ is removing all cash from selected branches in major cities but won't reveal how many branches are involved. I contacted the ANZ about that, and the ANZ say we've seen in-branch transactions fall by 50% over the last 5 years. Now just 1% are done over the counter. Most of it's digital. So I take their point, but in a sense they're forcing that to happen, or they're nudging that to happen that way, aren't they?
They're nudging that to happen, and I would dispute those figures. I think what they're talking about there is transactional data, not service data. And the feedback I've got from many constituents and in that inquiry is that a lot of people still want to go to a bank when they want a home loan. They want to get a credit card. They've got to sort out their, loved ones' estates. There's plenty of reasons why you might need to go to a bank and for a service rather than necessarily get money out from your account.
Queensland LNP Senator Gerard Rennick is my guest. They have a facility at post offices called Bank at Post. Many of the banks, there's sort of these they've become agencies, I guess. Are they appropriate? Do they do all the services needed that your committee has seen?
No, that's my understanding is they don't. And not only that, they're not being remunerated enough for the services that they do because they're expected to actually understand the products of a large number of banks. And the banks are actually also making money from that particular transaction as well. And my understanding of it is, and it's been hard because Australia Post don't want to disclose for commercial and confidence reasons that they're not getting as much now as what they were originally when they set up the transactions. But yet again, Australia Post doesn't have the capability to hold enough cash. It doesn't have the capability to provide all the banking services. So where those facilities remain, it's not up to scratch.
So where is this heading? I mean, I get the digital first thing. I mean, the ABC is going through the same difficulties. The people, they listen to the radio on their smartphone now, and it'll be in digital radios in cars or internet radio in cars one day. This sort of the digital revolution is brought this about in 90%, really. But at the same time, to a certain extent, banking is a human process because it's about my money. And when I have cash in my hand, it doesn't lose value. But every time I tap and go, I get clipped. Every transaction, no matter what, I lose a bit of money. It's like having the mafia skim a bit off the top, except it's a legal commercial practice. Where is this heading, Senator Rennick?
Well, we can continue to do what we're doing and rely on the banking code of conduct, which in my view isn't enough. Because as we've seen, there's been a banking code of conduct in for a number of decades, and that hasn't stopped banks from closing branches. And that's why I believe the only solution to this is to actually have a publicly owned bank that also provides insurance services, because there's a number of things that we can do with a publicly owned bank. As many of your listeners would know, insurance premiums are going through the roof by double digits every year. 40% of most insurance. So why not combine banking and insurance? And not only that, why not provide a stable form of income for retirees? I would like to see the Commonwealth Government go back to offering Commonwealth bonds For example, you could offer 4% tax-free to retirees or people who want to put their money in a savings or retirement account, and you can offer them 4%. That would be much cheaper than having and paying for the enormous cost of superannuation, which the Productivity Commission has valued at $30 billion a year in the financial engineering involved in that process. A public bank could also offer longer-term loans of, say, 10 to 15 years, rather than these shorter fixed loans of 5 years where, between 2 and 5 years where many people are vulnerable to changes in interest rates. And as you mentioned before, we've got this mortgage cliff coming throughout this year. So, I don't think there's enough competition in the banking industry and the type of products they offer. And I think that a publicly owned bank could offer some long-term fixed rates for deposits and long-term fixed rates for homeowners as well.
I'd like to talk about that, but another day. I simply don't have time now. One quick question before I let you go. You've been very critical of the Reserve Bank and how they printed money. They've done a research paper that said, yep, it didn't work. But basically it caused inflation, because it increased the money supply. They're now raising rates. Are you happy that Philip Lowe looks like he won't be reappointed as the Governor of the Reserve Bank of Australia?
Look, I am on a personal basis. I mean, I think there's probably time for a change there. Philip Lowe, my understanding, Philip Lowe was he pretty much graduated from university and started work at the RBA. And my understanding is the last 3 or 4 governors at the RBA all started their cadetship at the RBA. So we've got a lot of RBA groupthink there. But my view on the RBA is it should be accountable to Parliament. I don't see why setting the price of money should be in the hands of an independent statutory authority. My view of independent statutory authorities is that it's double speak front accountability. We wouldn't allow the tax office to set the income tax rate independently of Parliament. So why do we allow unelected bankers to set the price of money, without parliamentary overview? I mean, by all means, they can make a recommendation, but I think we should have a discussion about the way money is set, the price of money is set in this country, as well as how the volume of money is controlled as well.
A political discussion for another day. Thanks for coming in.
Thanks very much, Steve.
LNP Senator for Queensland, Senator Gerard Renege.
Authorised G. Renege, LNP Chermside.